first begin with the you know seeking Allah's help with regards to our webinar. Bismillah, Alhamdulillah, wassalatu wassalam ala ashrafil anbiya wal mursaleen, Nabina Muhammad wa ala alihi wa sahbihi ajma'in. So, in today's agenda, we're going to be looking into first an introduction about myself and um, my qualifications with regards to what I am offering you, what I do with regards to work, and then we're going to go into why invest, why should we um, invest our money, and um, what the importance of it. Then we're going to look into planning our financial future, how we can go about it, understanding risk that's involved, and halal investing, different aspects of it, the background, is it really halal, and then how to get started, and then finally Q&A. So let's get started, inshallah. So about myself, I'm Faraz Umar. I run Muslim Exchange, um, which is a platform to provide that provides Muslim investors Sharia compliance reports for global stocks. People who would like to invest, they they can come research on my platform and check if a particular stock is halal or not. And our platform is used by you know Muslim investors from around the world, and it's also used by reputed industry leaders like Sharia Portfolio, and we are partnered with some like Islamic advisory, Sharia advisory group like Raqaba, who serve Islamic banks and financial institutions in the Middle East. So that's my full-time engagement. I'm also a financial advisor, licensed financial advisor in Ontario. I've done my RRA, registered retirement analyst uh, program. Apart from that, I also have a certification uh, in Sharia advisory. I'm a certified Sharia advisor and auditor. I've done an MBA in finance from McMaster University. So that's a little bit about me. And just like to check if everything's working well. Okay. So why should we invest, right? From an Islamic perspective, um, one of the goals of the Sharia, one of the maqasid of the Sharia is to preserve wealth. Um, and that's why we have laws like prohibition of riba, prohibition of interest, because this is something that destroys wealth, destroys the wealth of people, communities, and societies. And likewise, we have laws like zakat, where you purify our wealth and we you know give it to the poor and the needy and for other needy causes, so that wealth can be distributed, and that brings about financial well-being in the society as well. So and then there's also a lot of encouragement towards giving charity. There's a lot of encouragement towards earning halal money. All of this points to the importance that Islam has placed in preserving wealth. And we also have inheritance laws, um, which again points to how important it is to preserve wealth, right? So that is from an Islamic perspective. Preserving wealth is one of the maqasid of the Sharia. The Sharia came for five main reasons, and one of that main reason is preserving wealth. And the second is to be independent, right? Um, Investing helps us achieve that independency. You can retire, or you can achieve your financial goals through investing. And this is a noble thing to do. Uh, Prophet ﷺ, in a hadith, he mentioned, that if a person is going out to working, earning money to be independent or to take care of his family, his parents, his children, then such a person is in the path of Allah. He's going to be rewarded for all his work, his struggles, and the time he spent in uh, towards this. So, all of these are noble goals. But then, if our intention to earn money is for show off, or just greed or competition in this dunya, then that is something that the Prophet ﷺ said is in the path of shaitan. So we need to have a good intention um, at the get go, because a good intention will lead to uh, will lead to whatever we're doing as something that Allah is going to be pleased with, and we're going to be rewarded for it. Um, and intention is the basis for everything. Um, and when we're going to get started with halal investing, we should first and foremost have a proper halal and a good intention, right? So, having said that, investing helps us achieve financial goals. So, some of the financial goals that people have about their kids' education, buying a home, Hajj, or planning for their retirement, all of these investing kind of helps us achieve these kind of goals, right? And also, if you look at the world that we are living in, um, you know, the economic system is a completely interest based economy, right? So the money that we utilize is very different from the money that used to be in the past. In the past, money would be like gold, silver. Those are like real assets, right? I mean, uh, tangible things of value. But in today's economy, currency or money is really these are just numbers or notes, or um, in other words, technically it's called as the fiat currency. It's just backed by government assurance, and all money that comes into the market is really based out of debt, right? So what happens because of this the nature of money that we're dealing with in modern economy is that the value of money is going to continuously come down, and there's always going to be a constant rate of inflation. So if we are going to save our money in cash, then we're going to be losing in the long term, because $100 today is probably not gonna the kind of things you can buy with $100 today, 10 years from now you'll probably need $150. So even though it looks $100 in 10 years, it's actually way uh, less in value as time passes. So, this is also an important reason why we must invest to try and preserve our wealth. Um, Otherwise, we may be losing our money's value over time. So, having said that, knowing, like, having a clear intention about investing in place, then we can look into planning our financial future, right? Uh, how can we plan our financial future? Why is it very important? Now, for example, if you have all of these different financial goals that you need to, I mean, responsibilities that are there on your head, but if you don't really plan for them, right? Um, it's not a very good financial decision you're making, because the Prophet ﷺ also said about tawakkul. For example, in a hadith, when one of the Sahaba, he came and asked the Prophet ﷺ, how should I have complete reliance and trust in Allah? Uh, you know, the camel that he has, should I just leave it open and then, like, not tie the camel and have tawakkul and trust in Allah that Allah is going to keep my camel safe and protected? Or should I tie the camel and then have trust in Allah? So the Prophet ﷺ said you must tie your camel and then have trust in Allah that it's going to be safe. So that's how, that's the kind of mindset we should have. We should do our part. We try, you know, to work towards our responsibilities, what we want to achieve, and then we have trust in Allah that Allah is going to help us achieve those things. um, and that's where the planning comes in. Planning and then implementing our plan is the effort that we are putting in. But is that necessarily um, going to give us the result? No, it may or it may not, right? So, just 1 second, let me check. Okay, sorry about that. Okay, so is it necessary that we are able to achieve what we want to achieve? No, not necessarily, but there is a good chance that by planning and working towards it, there's a good chance that we will achieve, inshallah. Um, the you know there's a lesser chance that you would um, achieve if you don't really plan for it, right? You put in your effort, and then you ask Allah, you make dua to Allah to help you out, and Allah is going to help and open ways for it. So that's, things are going to open up when you strive for things and when you try to achieve those kind of things. So that's why planning is quite important. and and if you're living in Canada, you have a number of options, for example, that many Muslims aren't aware of. Um, if you have, let's say, for your kids' education, if you want to plan a certain amount, you can open an RESP account, registered education, savings plan account, in which the amount of contribution that you make to that account, the government gives 20%, matches like 20% of it. So that way, you know, you are saving for your kids' education, and the money, even if you're just keeping it as cash, it still grows by 20% because the government um, is going to add 20% to it, and that money can be used towards your kids' education when it's due. So this is something that I was quite surprised to see that many aren't really making use of. Just want to see if there are any um, comments or anything of that sort. Please do put it in the chat box, and I will keep reviewing. If there are any questions that are coming up at each section, you can just put it up in the chat box as well, and I can deal with it at a later point in time. So that's for the kids' education. Now, for buying a home as well, you can invest your money, and with the returns, you can probably save up enough to buy a home. Now, I have a separate slide because this is something that is kind of a um, you know one of the most important discussions that goes around in Muslim families and households about buying a home and mortgage and halal and whatnot. So this is something that I'm going to deal with in a separate slide. Now, likewise for Hajj, for retirement, if you're employed, you're probably part of an RRSP plan if you're in Canada. So you can plan all of these things out. You can see how much will your annual income be on retirement at this age. For example, right? If you start planning now, you can look at it. Okay, this is what my retirement income looks like, and all of these tools are available right now. Like, and then you can adjust. Like, let's say if your retirement income that you're projecting right now is less than what you need, then you can start uh, making adjustments. You can start putting in money towards your retirement, more money towards your retirement, investing into it, so that by the time you're retiring, you have enough income. All of that is something that you can do now. Of course, can there be things that can happen that, like for example, who knows, we're going to live until our retirement. Of course, all of these things are possible. Now, now, but then, as I was mentioning about tawakkul, is that you do your part, and it helps, and Allah is going to help you in that, and you have tawakkul in that, right? So if things go normally, then in the end of the day, your Allah blesses your steps, and then you will eventually achieve it, right? W- w- Whereas on the flip side, if you don't do anything, you're very less likely of meeting your financial objectives. So that's why planning is really important. Now, as I was mentioning about the mortgage, one of the things that a lot of Muslims are concerned about is how, in fact, more than investing, the thing that consumes people the most is how and when should I um, buy the home, and how can I buy, and that's all that they're thinking about. How can I take out a mortgage that is halal? Is it okay, or can I go to the banks? I mean, that's all they're thinking about. But then it may not necessarily be a good financial decision, right? Because you see, let's say, nowadays in the GTA, in Canada, if you're anywhere around Toronto, uh, an average house would probably be $1 million, right? So, and people who are trying to, even if they're trying to go for an Islamic mortgage, let's say, um, what they're not seeing probably is the actual price they end up paying, right? They end up paying a lot more over, I don't know how many years the mortgage is going to be for. So the question that'll come, that we need to ask, is it really worth it, or is there a better alternative to do things? Now, for example, some of the financial advisors, um, planners will very popularly will say, talk about the 5% rule to make a decision whether you need to rent or whether you need to go for a mortgage. Now, these are like non-Muslim um, planners, so for them, obviously, interest-based mortgages are okay. So I'm just using this example to illustrate a point, that what they say is that, okay, so um, in the when you're buying a house, there are three costs that you need to consider, and it doesn't go towards the equity of portion of your home anyway. 1% is like, goes towards your property taxes, 1% maintenance, and then 3% mortgage. That obviously, that was at the time when the interest rate was low. So now interest rates are anywhere between 5 to 6% um, for a mortgage, right? So if we were to look into, let's say, 1% property tax, 5% is goes towards your um, interest mortgage, and then 1% goes towards um, the maintenance. So that's like 7%. So for $1 million, right? If you have to take the calculation of 7%, that's $70,000. So if you divide that by 12, that's nearly $6,000, right? So now, if your rent is less than this amount, you're just better off renting. So let's say you know, your rent is $2,000, right? I know that's kind of less in today's terms. It's probably around 3,000. But if you're, let's say, if you're renting and you've been renting for a while, then you're probably paying lower rent. So if you take that out, so you're paying $2,000 of in rent, and then if you were to go for a mortgage, that that's the kind of money you have to pay anyway. So this is your balance. Now imagine this balance if you were to invest over 10 years. So just would like to illustrate by going to an investment calculator. You can just search for investment calculator on Google, and then you can see, let's say, if you, even if you don't have a starting amount, like let's say you don't have any investment amount, um, you don't have anything saved up, and you are contributing $3,800 at the beginning of each month, right? And what if you're investing into the stock markets in the US, for example, a return rate of 10% is kind of achievable, and we'll see that uh, in the coming slides. So what happens is that in 10 years, your saving or investing uh, will actually give you, you know, $765,000. So so you can see that how if you actually plan to buy a home with cash, for example, by saving and investing your money, it's you just have to, like, wait for some time. You would be able to buy a house by saving and investing your money, right? And that's the most halal way of buying a home. Just buy it in cash. You just have to wait until you're able to achieve that kind of money, as opposed to, so look at this. Okay, in 10 years, by saving and investing for 10 years, you actually contributed close to $500,000, but you end up with like $765,000. So you have, obviously it says interest, but this is because you're investing. It's These are profits. Uh, so you're making a profit of $300,000 over 10 years by investing, right? So you end up paying less for your home because you know you are actually making a lot of profits. While on the flip side, if you actually take a mortgage and then you buy a home now, you end up paying a lot more, because a lot of that, you pay extra because it goes towards financing. Now, Islamic mortgages, the halal mortgages, are also going to charge extra. They're not going to, like, if the house is valued at $1 million, they're not just going to give you $1 million and take back $1 million. What they're going to do is they will buy the house and they will resell it to you at a higher price. And this is obviously Islamically permissible because you can you can buy and sell anything at any price. So they're going to sell it to you at a higher price than the market value, that you can pay in installments over how many ever years. But in the end of the day, you are going to be paying extra, right? Whereas if you were to take on an approach of investing, um, it's you'll be much better off financially, in my opinion. Now, obviously, the contribution that I'm talking about is something that probably many won't be able to. But then that's what we're looking at for $1 million home anyway, right? So $1 million home is really out of reach for many people who don't have so many earnings. So we have to consider other options, either to find alternatives, cheaper places to move to. But this concept, what I'm talking about, is applicable whether that's for $1 million home or for 500,000 or for 300,000, for example, right? So so that's something to keep in mind. That you know a number of people, a lot of people, they think that the mortgage or the buying a home or is their becomes their priority, and then they end up making a very poor financial decision, and then they're stuck with the payments, and it's just not worth it, right? So having said that, back to our financial planning. So how do you actually do the financial planning itself? So first thing is that you need to calculate your net worth, right? There are assets and there are liabilities. What are assets and what are liabilities? Assets are all your cash and your goods, your valuables, property, jewelry, whatever you have, all of that. And then liabilities is your expenses, your loans, whatever you was due. So you take all your liabilities out of your assets. That gives you your net worth, right? So that's how you first get started. Okay, how much do I actually have? And then you start calculating your monthly expenses. How much income am I making? Like, let's put in all um, all my sources of income, and let's see, this is how much I'm making per month. And then where's that money going? Where am I spending it? So I list all of it down, and then I see how much money do I have remaining? How much money am I able to save? And then when you plan this out, you'll also probably come to terms with, okay, am I actually making unnecessary expenses? Can I cut down over here a little bit without actually affecting much, but it's going to make a difference towards my savings. So this will help. So that's something that you need to do when you're planning. Now, one of the first steps that uh, you need to make sure with regards to your financial planning is that you must have an emergency fund. This emergency fund should be able to cover your expenses for at least 3 to 6 months, depending on the volatility of your employment, the industry that you're in. Um, you know, that's a decision that you can make. How many months of funds do I need? So let's say something happens to my income. Uh, you know, I need at least 3 to 6 months of cash and savings to cover my family's expenses. So, uh, have that amount in cash always available at your disposal. So, anything happens, you have that kind of cushion. Now, once you have ticked that box, you have that much amount of money in your emergency funds, based on the calculation that you did before, right? You did your monthly expenses, and then you've come up with the emergency funds. Um, Now, after that, now what you need to do is now you need to start planning your investing. How am I going to achieve now you need to start planning your other financial goals. Like, so what, list down your short term and your long term financial goals, right? It can either be kids' education, and then, or Hajj, or buying a home, or retirement, and then put a dollar amount to all of these goals, right? If it's kids education, how much do I need to save? um, do I need? How much do I need? And then in how many years do I need? Just write all of that down for Hajj or for home, for retirement. You know, put the time duration and how much money you need. Then you can see, okay, so this is what I'm looking at, and am I falling short of it? How much should I, contribute? How much should I save towards each of these goals? Uh, so you'll have a better idea, a better picture about your finances at this point in time. Now, once you've done that, now before we actually get into the aspect of investing, I would like to mention over here something about risk, right? Nothing is really guaranteed, as I was mentioning to you before, right? Whether that's investing, whether that's your job, whether that's our life. So um, keep whatever we do, there is risk involved. Um Now, non-Muslims will will try to reduce their risk by dividing their money into into different investments, different types of asset classes. So some amount of money they're going to put into stocks, some amount they're going to put into, let's say, real estate, some amount they'll put into fixed income earning interest like bonds, and some amount they're going to keep in cash. Now, as Muslims, we are not going to, uh, earn money over interest, and that is absolutely prohibited, right? So, so what do we do? One and one of the ways you can actually manage your risk is by diversifying your money, right? So let's say you have $100. If you put all of your $100 into, let's say, you know, in one company, you just buy $100 worth of Apple or some other, company. You put all your money into that one company. Now, the risk is that what if this one company fails or its value comes down, doesn't do well? That kind of risk is pretty high, right? So so one of the best ways of managing your risk is to diversify your investments into different assets so that even if, let's say, if the stock market does not perform well, you have you know you have money into other assets, like you have cash or you have real estate or you have gold. So what happens is that you're not hit very hard. uh, Likewise, if, let's say, the real estate market goes down, or the gold price goes down, you have assets in stocks or other asset classes. So because of that, you're not hit that hard again. So that's how we manage risk. Now, for Muslims, obviously, um, with regards to our investments, uh, interest-based investments are out of the picture. And generally, in the financial world, they'll classify interest based investments as being lower risk than investing into businesses, which is kind of obvious because interest payments, I mean, loan is something that, you know, person or a company is obliged to pay back to you with the interest payments, right? Whereas the investments are not like that, um, and Allah has prohibited, um, you know, interest-based loans. So, and obviously because it's not good for the economy, and so on and so forth. So, a Muslim's investment portfolio is always going to be higher in risk because a lot of our investments are generally um, they're higher in risk because we don't include interest based products or services or in our portfolios. So that is something that I would like to point out as well. Now, still, even if we were to, it's not that we are at a disadvantage because of this. And I'll explain to you why. When we're going to be looking into the stock market investing, how many even non-Muslims today, they're actually not very interested in investing into um, debt-based or interest-based instruments. Um, you know, because by diversifying their investments into stocks itself, they're able to reduce their risk significantly, and they get a lot more in returns. Also, it's important for us to remember that the barakah is something, the blessing is something that comes from Allah, and um, there's absolutely no barakah whatsoever in haram types of investments. So alternatives to these interest based kind of investments uh, are like, we have gold, we have sukuk. Sukuk is they're they're like, let's say, the Islamic version of bonds. It's more like you're buying assets of companies, and they are giving you returns on their assets. So so and and that kind of gives us a halal alternative to bonds. Obviously, going into more into detail into that will be out of scope for our introductory kind of webinar. But the point over here that I would like to mention is, you know, managing risk and diversifying. So, so about halal investments and halal investing, Muslims generally have invested into real estate and gold. Stocks is something that is, becoming more and more popular, but still many Muslims don't really get it. They're not really into stock market investing as much, and that's because you know we're we don't either because we're not educated on this, and this is a type of investment that has kind of eluded us for a long time, right? But if you look into the performance wise, and this data is, until 2019 by Bloomberg, that if you see in a 30-year or a 10-year performance, stocks have outperformed in the returns when compared to gold, for example, right? Gold has done better in a 20-year performance, and all of these things are important for us to keep in mind when we are, uh, planning our finances and investments, right? Another popular option for Muslims to invest into is private equity. But then this is something that people who have a lot of money, they're high net worth, they can, use this option. That is buying businesses, buying private businesses, investing into them, investing into startups, for example, venture capital, um, and and that can also be a good source of investment if you know what you're doing, and it can bring in a lot of returns. So with regards to the stock markets, there are there are some positives and there's some negatives about it to keep in mind. Now, the positives is that you have a lot of good returns. The S&P 500, the index that includes the 500 top companies of the US market. That's what the S&P 500 index is. If you look at it, if you look at this index over 50 years or even 100 years, you'll see how over on an average it has given us returns of uh, annual returns of 10%. as you can see in the screen, there have been some years that the stock market crashed, it went down. Some years, the the stock market performed really well. This chart is really about the S&P 500, the 500 biggest companies, right? So depending on the economy, sometimes there's a war, there's sometimes something, there's a bubble burst, like financial crisis we've seen in 2008, we've seen the pandemic in 2020. So during those times, obviously, the entire economy is down, and that's why you can see that the stock markets are down as well. But in other years, when the economy is doing well, businesses perform well, they make a lot of profits, and that's why you see the stock markets go up, right? So, but on average, when you take into consideration both the positives and the negatives, the average annual rate of return on S&P 500 has been 10% every year. So, a lot of people have studied, researched, and they found that over a 20-year period, right? If you were to invest into the stock market like S&P 500 for 20 years, minimum of 20 years, then no one has actually lost money in any 20-year period frame in the past. So that's something that they've studied and come up with. Obviously, all of this is past performance. We don't know how things are going to be in the future. Uh, so that is something to keep in mind as well. So these are good positive aspects of the stock market. The other positive aspects are is that your investments are pretty liquid. You can you can turn them into cash very quickly. Investing into the stock market is generally very, involves low fees when compare in comparison to investments like real estate, for example. Even liquid, for example, when you compare it with real estate, investing into shares is pretty liquid. It's easy to diversify. You can diversify your investments into many different industries, sectors, different companies. So you can do that pretty easily and while investing in the stock market. Now, the obviously the downside is that market volatility. You don't know when what can happen. So, so for example, the pandemic happened and we saw the stock market crash, right? But then in about a few months, in a year, it recovered. The stock market recovered, and we saw the 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 returns go pretty high. So those are things that can happen, and what because of that volatility, you're susceptible to make emotional decisions. You can become scared, or you can start getting worried, and because of that, people end up making emotional decisions, and then they kind of um, lose out, or they lose money in that way. Because if you look into, for example, the charts, yes, there is volatility, but over a period of time, you know that these businesses, the market itself performs, um, is going to perform okay. It's gonna, it's going to be fine so if you're not affected by these short-term volatilities, um, over time, over 10, 20 years, you will have significant amount of returns. So another downside of the stock market is that there are a lot of people who use trading on stock markets as which is really similar to gambling. Now this is something that we need to stay away from. um, People will buy and sell every day based on speculation. There are these options, derivatives that are traded. It's more like betting, that goes on the stock market. But obviously, for Muslims, all of this is just not permissible, and we're already, protected by those things because Islamic rules do not permit us to engage in such activities. So that's a little about the pros and cons. I'm just going to check if there are any questions. If you have any, sure, I will address that, Brother Fayaz. Okay, so those are your pros and cons of stock markets. Now, as I was mentioning about the risk aspect, right? Um, that as Muslims, our investments are going to be of higher risk, and uh, but then I don't know if this is something that can provide some kind of satisfaction or some kind of confidence. There was a research done into the percentage of families who are investing into the stock market in the US, right? And they saw that the more people are educated, the more people are making more money, they are more likely to be investing into the stock market. And by ethnicity as well, white are uh, more likely to be investing into the stock market. So, and based on my own research, I have seen that a lot of these people are managing their own portfolios, and they actually don't really um, invest much into these fixed income type of, or interest based instruments. They know what they're doing, and um, you know they're investing pretty well into the stock markets, and that's something that we can see, that the more conscious, uh, um, the more elite they are in the society, they're more likely to be investing into the stock market. So that was a little bit about stock market investing. Now, with regards to Sharia compliance for stock market investing. Now, let me first give you a background about, a lot of questions are there among people about how Islamic is it really to invest into the stock market. Now on in the basic principle is that you're investing into a business, right? So that is permissible in Islam. There's nothing wrong in investing in a business. Now, the problem comes when companies are, obviously we know companies that are involved into alcohol, companies that are involved in, um, haram entertainment, or other haram activities. Those are companies that we should not invest in. I mean, that's something that is is quite clear to all Muslims, right? But when it comes to companies whose businesses are in general permissible, but then they are involved in some un-Islamic aspects or the other. For example, you know, um, companies will use financing to run some of their operations, um, and and most of these public companies are non-Muslim companies, and they're going to be financing their things based on interest-based debt, for example, right? In fact, even if a company is doing really well, it has enough cash, it doesn't need any debt, they will still, as a strategy, a financial strategy, have a little bit of debt. Why is that? Because the interest payments that they make are tax deductible. So they will use that to reduce the amount of taxes they pay. So that's why they have an optimal strategy to have an optimum amount of debt that will bring about um, a maximum value to them. So so that's something that is unfortunately the world we're living in, right? uh, the public markets, companies are are non-Muslim, and they are, you know, not necessarily operating in line with Islamic rules. That's one thing. The other thing is some companies will have some amount of, like, even if their base um, business is permissible, they will have some impure income coming in, either from interest income that they're earning from their extra cash, or they have a lot of cash they've invested into stock markets or into bonds, and they're earning some interest on that. Now, what do we do in these kind of things? So these are companies that are into halal businesses, but then they're operating in this manner, in this scenario. So obviously, the basic rule is that if you are running a business, none of this is permissible to do, as a, in Islam. Um, so, but then considering the situation today, and because investing into the stock market, Muslims would largely be completely excluded from it, and this will bring about a lot of you know disadvantage. And because of the pressing need for these kind of things, the Sharia scholars from all around the world, they have looked into Islamic texts, and they have uh, gathered from various evidences about the exceptions that can be made in this regard, and they have found, um, they've applied those rules. So the most popular of these Sharia standards is IOFI, which is, I'll show you their website. So this is an organization that's based in Bahrain, and I'll show you their Sharia board members. As you can see, their Sharia board members are from all around the world. It's headed by Mufti Taqi Usmani, who's a very popular Islamic scholar in Islamic finance from Pakistan. There's Sheikh Abdullah Al Mania, who is one of the senior scholars of Saudi Arabia. Again, Sheikh Abdullah Al Mutlaq, one of the senior scholars of Saudi Arabia. So you have, a lot of Saudi scholars as well. You have, scholars from Sudan, from UAE, Bahrain, Kuwait, Qatar. All of these, all of them, uh, you know, obviously this is the Sharia board of IOFI, and they also have many other boards and supporting scholars and people of knowledge. So they've come together and put together Sharia standards, not just with regards to Islamic, with regards to investment to stocks, but with regards to everything regarding Islamic finance. And their Sharia standards really form the basis for all the, 99%, I would say, of the Islamic financial institutions around the world, Islamic banks, and all of that. So, um, and for with regards to investing into the stock market, um, you know, what they've said about this impure income, when it comes, when it's part of a company that is basically permissible, is that if that impure income is less than 5% of their total revenues, then such a company will be permissible to invest into. How do they make this exception? Is because they say that, for example, if there's a large body of water, and a few drops of urine or blood falls into a large body of water, if the water's color, its taste, or its appearance doesn't change, then that water will be pure to do wudu from, right? Because that minor tiny impurity does not change the composition of the entire water itself. So So, just giving an example, obviously there are many, just to give an idea of how the basis of the Sharia rules. Um, Obviously, there's a lot more of references, text, and research, which you may, for example, go on IOF's website, download their Sharia standards, and they have all of that in their on their standard. Like you can just go to their standards and you can read, you can access the Sharia standards, and and you can read more about it. So that really is an example. And likewise, you have standards for different operations of the company and so on. Um, and at Muslim Exchange, what I do is we have, you know, we provide Sharia compliance based on IOV and other popular Sharia standards. We provide, Sharia compliance for global stocks, right? And that's what I mentioned in my introduction as well. So, that's a little bit about how Sharia compliance for stocks works. Now that you've okay, you understood uh, a little about how investing into the stock market works. Just gonna check if there are any other questions. Yes, it will be available as a recording as well. Okay, so the three popular approaches with regards to investing itself is either you have uh, people doing technical analysis, fundamental analysis, and ETF investing. Before I really go into this, um, are there any questions so far? Is everything okay? Are you able to follow everything is okay so far? Do you have any questions up to now, brother Fayaz? I have, with regards to Indians working in the UAE, I'm gonna address that once I deal with the investing into stocks itself. So, okay, I don't think there are any questions at this until now. So just, just continue for now. Okay, so now that we've uh, understood about halal investing into the stock market, um, how do we really invest into the stock market itself? Now, there are three popular approaches on how people can invest, right? Some of them will do this day trading, and for that, they'll use technical analysis. Uh, well, that is something that I do not recommend, because technical analysis and day trading is really based on a lot of patterns. What they'll do is they'll just be reading patterns of how the stock market is moving, and based on past patterns, they're going to speculate that this is how this stock is going to move in today, and then they will kind of use those strategies. Now, this is highly speculative and not recommended at all. So if you're coming across stock market investing, and people are promising you can make so much money in a week, uh, if there are all these ads, or social media geniuses who tell you how by investing, well, by trading, they're making so many thousands of dollars. All that is really nonsense. uh, they're just trying to make a fool out of you, and they're just because, according to studies, 97 percentage of people who engage into day trading actually lose money, right? um, Very few, like only 3%, are able to break even or make money. And in this, really, there are a lot more details in this, because what happens in speculation is that there's this aspect of gambling coming in over there because somebody else loses and somebody else wins. There's no value creation. um, all of this I discuss in more detail in a Muslim investor class workshop, and how to invest. But right now I'm just going to go over uh, it briefly. So that's why it's not recommended. Now, ETF investing. Now, this is a very simple, effective, and highly recommended strategy for people who don't have much time, really, who don't have much time to be learning about how to invest or analyzing companies, reading their financial statements, all of that. If you don't really want to do all of that, right? You're busy with your day job and you still want to invest into the stock market. Uh, this is a very simple and effective strategy. What does it mean? So ETFs are like electronic traded funds. What they'll do is they will invest into um, an index, right? One of the indexes that I mentioned to you was the S&P 500, right? Which is the um, 500 biggest companies of the US market, right? So, so what will happen with these ETFs is that one of the companies what will do is, okay, we're going to track the S&P 500, and this ETF is going to invest into all of these 500 companies. So when you invest into this ETF, like let's say you buy $100 of this ETF. So your $100 is going to be divided into all of these 500 companies, right? Um, so this is a very effective way of investing. Why? Because first of all, the S&P 500 has 500 largest companies from all the industries in the US market, right? So a very easy way for you to diversify your investment. Now, what is the risk that all these 500 companies are going to fail, right? The risk is pretty low that all 500 biggest companies in the US market are going to fail. So that's the risk that you're looking at. You're looking at the risk of the entire market itself. So, which means that if the entire US market fails, that's when, you can say that your investment is going to, well, fail as well. Or, it's not, you're going to lose money as well. So, so you've reduced your risk by investing into an ETF to the bare minimum because you've kind of, you know, um, invested into the whole thing. So, and why is this very? So it's very simple to do this, right? There's so many such ETFs available. They're pretty cheap. You put in the money, it diversifies, and it gives you good returns over time. If you look, you know, as I mentioned to you, this is one of the most popular indexes that is followed in the entire world, the S&P 500 of the US market. Now there are many other indexes. If you don't want to just focus on the US market, you believe that the US market doesn't have a very good future, you can diversify by putting your money into ETFs that are focusing on the entire global markets, all the biggest companies or the best companies of the entire world. You can invest into all of that. So then, even if one country goes down, you still like your investment is pretty safe. But then you should also keep in mind that your returns are going to become lower in that way. So yeah, you have diversified your risk. Your risk is lower now because you're invested into the entire world, but you should also know that the returns that the US market has given over the last 50 years, no other country's market has given that kind of returns because US is still the most advanced economy in the world, right? So that's the kind of balance you need to think about um, when you're kind of, um, with your risk and your return kind of a thing. So, so ETF investing is essentially that you have all these different indexes, and there's so many different indexes. I just give you an example of S&P 500, and some of the most popular indexes will have many companies coming up with ETFs that we're going to be tracking this index, and we're going to be our investing strategy is just following this index. Um, and it becomes very easy and effective way to do that. And why is it highly recommended? Because many times investing into these kind of ETFs, you get better returns than uh, you actually kind of researching and picking companies to invest into, because about 80% of the investment companies will not be able to match the profits or the returns of the S&P 500. There's been a lot of uh, research and discussion on this. The When you compare, for example, the returns that S&P 500 has given, when you compare it with the returns of investment companies where they have actually done the research, built portfolios, and invested into these kind of companies, 80% of those investment companies were not able to give the kind of returns that S&P 500 gave. I hope that kind of makes that clear, right? But obviously, there have been good companies, good investment companies that have done better, but the majority have not. So it's kind of a easy, simple way to invest, especially for people who don't really need to think much, and you still make good amount of money that way, right? Um, but obviously, the S&P 500 is not Islamically, permissible. So what do we do about that? Because obviously in the S&P 500 there are companies that are banks, there are companies that are not compliant. So from a long time, really, there's been, there's so many Muslim investors, Muslim companies, Muslim countries that want to invest. To serve them, the S&P has always had this Sharia S&P 500 Sharia index. So what it does is that it just tracks only the Sharia compliant companies in the S&P 500. So all the non-compliant companies are excluded out of this index, right? And we have a company that invests into this index. It's called the SPUS, SP funds, right? If you look into their performance, for example, it's been pretty solid. It has, in fact, over 5 years, if you compare it with the S&P 500 itself, it has actually outperformed the S&P 500. You know, because um, because Sharia compliant companies are low in debt, um, and they tend to perform better than non like the general market. You can see, over 5 years, it has given like nearly 65% returns in 5 years, which is pretty good, right? Whereas if you look into, actually, it's not been 5 years, right? 2019. So that's okay. It's not really 5 years because it was released in the end of 2019. But if we were to compare the S&P 500 over a similar period of time, the SPUS has done way better. Um, so so essentially, what you can do is you can find some of these Sharia compliant good ETFs or mutual funds and just start investing into it. That's all you need to do. That's one very simple and effective strategy to go about, right? The other final approach is the fundamental analysis, where you actually, apart from having ETFs, let's say you have like 50% of your money into ETFs, into indexes, and then you also want to put some money into your own analysis, and you want to build a portfolio of companies that you believe are going to do better in the future. You can do that by researching and coming up with your own portfolio, right? So all of this will obviously require um, a lot of learning on how to do it, right? So this is a little about how to really invest. Now, I would really like to, before I go forward, and kind of coming um, to the conclusion, um, now about the ETF investing, I would really like to show how the ETF investing can make a big difference. Let's say, as I was mentioning to you, look at, for example, the you know annualized returns of the SPUS. Now, obviously, in the past year, in 2023, it gave us a returns of 30%, which is pretty solid, right? Now, I think this Google does not give me what I'm looking for. Um, See if so you can see that the SPUS over 3 years, it has given an annual returns of 11%, because that's when it came, right? That's when it started. But the same thing, if you were to look at SPUS, sorry, S&P 500's very popular uh, ETF for the entire S&P 500 is VU. As you can see, the 3-year annualized returns has been just short of 10%. That's what I was trying to say, that the Sharia compliant ETF has done like nearly 2% better than the S&P 500 itself, right? So we as Muslims, we have a very good, obviously this, a very good option to invest into. We have Sharia compliant ETF that actually perform better than the it's comparison, right? So, and if you just look at, for example, if you were to invest just $1,000 every month, right, in the beginning of every month, and let's say I'm keeping the return rate at 10%, right? That's been the average. You don't have any, let's say you don't have any starting amount to invest. You don't have any saved up money at all, and then you do it every month on a regular basis. You are just saving this $1,000 and you're investing it into an ETF like SPUS, or for India, let's say you are investing it into a Sharia compliant mutual fund, like there's a Tata Ethical Fund, for example. You start doing this, what happens is, over 20 years, you know, your total contribution has been $240,000. That's the amount you've contributed for 20 years, and your total profit is close to $500,000. It's like double. It's literally, you've doubled your money in 20 years. You see, and then you end up with over $700,000, which you would, if you were just to you know keep that money in cash, or you're just ending up with $240,000, right? So consistently investing, saving and investing consistently every month is the is the way to go if you really want to build your wealth and if you really want to achieve your financial goals and your retirement plans or whatever you want to do, you know. So go back to what I was mentioning, you know, about the financial planning. I'll go back to that slide, right? So, how to plan, right? You've written down your short term goals and your long term goals. Now you know about the investing options you have. You can either save in cash, you can invest into the stock market. The stock market, remember to, at least have a time horizon of 10 years or something like that. If because for shorter period of time, you need to you need to know that stock market can be quite volatile, and it's not generally recommended for a shorter periods of time, um, because there's a risk of losing money, right? So that's why for things that you need for a shorter period of time, um, you have to use other strategies, right? Unless you know what you're doing, and unless you know, um, and you are able to come up with a strategy for 3 years or 5 years. But other than that, 10, 15, 20 years goals you can achieve very well with the stock market, right? Because you will be reducing your risk, and even with even without all of that in-depth knowledge, you can still go about and doing it in a much, by taking on very little risk. So once you have put in your short-term, long-term goals based on your time frames, now you can plan with with your knowledge of now ETF, or investing into the stock market in general. You can plan how you can actually achieve these goals, right? So that was the whole point of this whole thing, about trying to plan your finances, achieving your financial goals, and how do you do it? How does investing come into the picture, and how you can use investing to actually meet your financial goals. I hope all of that kind of tries to make sense now, right? If you're working in India, if you're working in Dubai, as Brother Fayyaz is mentioning, uh, you're actually at an advantage because you can invest back in India, or you can invest into the US market as well. Because if you're earning money in dirhams, right, your currency is pretty stable, unlike the Indian currency, which is it has seen its value drop by quite significantly in the past few years. So your currency is quite stable because it's pegged to the US dollar, right? So you're not going to lose much value when you're investing into the stock market in the US. You can invest into the US, you can invest in India. You have different options that you can do for investing into the Indian market. Now, Indian market is also pretty solid because it's a developing economy. You can make a lot of returns. uh, when I was checking the Indian market, there are just I think three Sharia compliant funds that I came across. One is the Tata Ethical Fund, which has pretty solid performance. It's a pretty solid fund, mutual fund. It's actively managed. It's not an ETF, so you have a portfolio manager, and it's an actively managed portfolio, with you can read up their prospectus, their strategy, and they're targeting medium to long term results. You can start investing into them. There's also a couple of others. I think Taurus Ethical, or there's Nifty Sharia. I think Nippon Sharia, that tracks the Nifty 50 Sharia index. So you have these three Indian options, and all of these are pretty solid funds to consider. Um, if you want to invest into the Indian market. If you want to invest into the U.S. market, you know, you have uh, you have a few good ETFs, halal ETFs. I already mentioned SPUS. There's also halal ETF. This is by Wahid. They track the FTSE USA Sharia. Again, this is just in the US market, focuses on the in the US market alone. There is this SPTE ticker. It's a new one by SP Funds. It's a global technology ETF. It invests into global companies that are that are in the technology sector industry, right? Then you have um, then you have a few others as well. You know, there's SPRE ticker. They have it's a global REIT. It's a real estate investment trust. So if you're unable to invest physically into real estate, you can always invest into these REITs, which are real estate investment trusts, and these trusts invest into real estate. Um, and so they have a global REIT, so they invest into global real estate assets. So that is also one of the things you can invest into, and this is a Sharia compliant one as well. So some of these are you have some of these options for Sharia compliant ETFs. You can just stick to one few, or you can learn more about them. Obviously, this is just a introductory kind of a thing, but really, I have really covered in this everything that you need to get started, right? You just need to go first, start, prepare your financial investing plan, sign up with some brokerage. If you have a brokerage like Interactive Brokers, for example, is available around the world, you can sign up with them, and then you can just start um, implementing your plan. Like, let's say I'm going to, based on your savings or your financial plan, I need to start investing this much into whatever. I'm going to diversify my assets in this way. You've made the plan, then start implementing the plan, and then monitor the results of your plan every year or so, and then keep learning keep learning more about investing and how you start becoming better and better that way, right? So that's really a summary of our webinar today. um, you know what kind of services do I offer? I have, one you've already seen, Muslim Exchange, the Sharia compliance reports. I'm also a financial advisor, so I actually help making your doing everything that I've just said to you. Making your financial plan, your investing plan, your retirement plan, all of that. I can help you actually do it, like hold your hand and do it. Actually, you can do it yourself. Based on this free webinar, you can just whatever you learn, you can download some of these templates, Excel templates. They're available for free for your monthly expenditure, all of that put together, and making a financial plan. You can do it on your own, or if you want a financial advisor to take you through, I can do that for you as well. And then I also have a Muslim investor class where I actually teach you how to, I go in depth about investing into the stock market, and teach you how actually you can analyze companies, and analyze based on, whether or not this company is overvalued. Is this a good company to invest into? Um, so because let's say, what happens in the stock market is sometimes the hype really drives the prices up so much that it's not worth anymore. For example, let's say the iPhone, when you're buying an iPhone, if it's $1,000 phone, you don't want to pay $5,000 for that phone, right? Because it's not worth it, right? Likewise, companies, what happens is that the stock market is run by a lot of emotions, right? Sometimes people, they hype a company so much that they all drive the prices, the stock price of that company so high that it's no longer worth as an investment. So how do you determine whether or not this company is worth the investment or not? Uh, all of that, you can do that analysis. I teach that in the Muslim investor class. So these are the three services that I have. If you're interested, you can always email me at support@muslimexchange.com. I'm just gonna write that for you so you can. So that's the email address if you want to. It's Muslim Exchange doesn't have E in it. So if you want to connect with me, or if you need any help with any of these things that I'm mentioning, you can always connect. So that really brings us to the conclusion. And if you have any questions, we're happy to answer. Inshallah. I hope I answered your question as well, Brother Fayad. And if you have any questions, please you may post on in the chat box. وإياكم. Okay, I guess it's not there are no questions, I guess. So inshallah, with that we come to a conclusion, and I hope it was a little beneficial. Jazakallah khairan for attending. And sallallahu alayhi wa sallam wa ala sallallahu alayhi wa sallam ala nabiyina Muhammad wa ala alihi wa sahbihi ajma'in.